There was brilliant talent all over the continent, but there was this structural gap in funding at the seed and early Series A stages. And that gap was essentially killing growth before these founders even had a chance to take off.
For us, driving the development agenda and using technology to bridge it becomes such an important part of our thesis of how we invest in Africa.
Launch Africa was one of the only ways in which we could bring institutional level gravitas to early stage funding and fix that gap.
Welcome to the 10th anniversary season of Swiss Impact with Banerjees.
This season, we bring you the movers, shakers, and visionaries who are redefining industries and turning investments into real lasting impact.
These are the investors changing the game, driving sustainability, transforming lives, and proving that profit and purpose go hand in hand.
Every investment is a choice to shape the world we leave behind. If you're ready to be part of something greater, to invest in impact, to invest in hope, to invest in change,
this is where your journey begins. Welcome to Swiss Impact with Banerjees. Today's theme is from funding gap to job creation, and it's all about Africa's big bet. Last week, Ben and myself spoke at multiple events across Zurich and Lausanne in Switzerland, and one theme kept surfacing, which is Africa's unstoppable rise.
Exactly. And despite global turmoil, Africa's innovators are rewriting the rules. The continent pays over $160 billion each year just in debt interest. Not the principal, just the interest. And yet it is producing some of the world's fastest growing startups.
Yes, energy, AI, lithium, data centers. Africa is leaping into the future while others hesitating.
And at the heart of that momentum stands one investment firm transforming ideas into jobs and prosperity.
So today we are joined by two innovators providing that impact and profit can thrive side by side. Together, they've baked 160 plus startups across 25 countries at least, creating tens of thousands of jobs and unlocking the continent's potential.
Their mission is to close Africa's funding gap, empower women founders, and scale climate-smart solutions that this world urgently needs.
So please welcome the powerhouse duo behind Launch Africa Ventures, Mr. Zach George and Janade Duplessis. Where are you guys? Hi, welcome. Great to have you with us. Where are you right now?
We're both based in Cape Town in South Africa.
Where else, right? Amazing.
They have been trying, Zach has been trying to convince me that we should move to Cape Town. He said that Cape Town is an amazing place to be.
Sounds they need to convince me as well. Now, let's go to introductions. I start with you, Zach. So you are Wall Street trained investment banker turned a venture visionary. You're co-founder of startups Bootcamp AfriTech and Launch Africa Ventures. You have invested in more than 100 top African tech firms, from Flutterwave to Kuda Bank, and were named amongst Africa's most influential voices in technology. So, and you, Janade, you are five-time fund manager and serial entrepreneur who have traveled to 51 African countries. I think many people don't even know there are so many. So you have built funds empowering women founders, led corporate VCs, and now co-heading Launch Africa Ventures, bringing psychology, finance, and heart together to redefine venture capital on this amazing continent. Gentlemen, what a privilege to have you with us on Swiss Impact with Banerjees. Welcome one more time. But before we jump into questions, maybe you can say in one word, why are you here with us today?
Good afternoon. I am Janade. I'm one of the co-founders of Launch Africa, and I'm here today to tell our very impactful stories to people around the world that are interested in impact as well as commercial returns.
And you, Zach?
And I'm Zach George. I'm one of the other co-founders and managing partners at Launch Africa. I'm here to talk about how I transitioned from being a very conservative banker on Wall Street, moving to Africa 15 years ago and realizing that you can blend the worlds of impact investing, commercial finance, and entrepreneurship all in one, while still getting above market returns and creating significant impact on one of the most important continents from a development perspective.
Wow. So let's, with that, launch into the first question. So Launch Africa has exploded into the scene. 160 startups, 25 countries, thousands of jobs. What was the lightning bolt belief that made you say, we are doing this, we are backing Africa's future ourselves?
Yeah, I mean, I'll go first. Yeah, when we started Launch Africa in 2020, it wasn't just because we thought Africa was the next big thing. It was really because we could see a significant pain point very clearly. There were hundreds of startups that were raising money too early, often at big discounts, often 40 to 50 to 60% lower than what you'd see in the US, in Western Europe, in Asia, or even Latin America. And it just didn't make sense. There was brilliant talent all over the continent, but there was this structural gap in funding at the seed and early Series A stages. And that gap was essentially killing growth before these founders even had a chance to take off. I mean, and for me personally, I'd spent almost a decade on Wall Street. I'd come to Africa in 2015. I'd built the first accelerator, corporate-backed accelerator in Africa, and I'd seen so many founders building amazing companies, but with a very similar pattern. They were undercapitalized, they hadn't raised enough money, and the valuations were really low. And Launch Africa was one of the only ways in which we could bring institutional level gravitas to early stage funding and fix that gap.
That was what do you mean by undercapitalized? They had too low valuation, or they didn't have enough funding?
They just didn't have enough funding. Most funding before we came on board a few years ago was traditional bank financing. It was lending, and the few private investors funding startups in Africa were really almost fleecing founders of what their true equity valuation was. So it was less capital, and whatever capital was there was at really unfair and almost predatory terms.
Yeah, that sometimes happens in impact investing, that they call themselves impact investors, but the rates and the interest rates they demand are actually similar or higher than traditional banks. Yes.
Yeah. And I would just add that for me being African, I've also seen how governments have not kept up with the development pace needed for our economies to move forward. And we always say in Africa that entrepreneurs is what drive our continent, and that's why we have very strong informal economies and informal networks. And I strongly believe that technology is able to bring and close that gap between the informal markets and the formal African markets. And so we are driving technology around our themes, which is Africans must be able to transact with each other, which is very strong fintechs in our portfolio. Africans must be able to move themselves and goods. So we invest in transport and logistics, economic marketplaces. Africans must be healthy, so health tech, and Africans must be educated. So we develop a lot of education platforms and invest in education technology companies. So for us, driving the development agenda alongside the government's development agenda and using technology to bridge it becomes such an important part of our thesis of how we invest in Africa.
But you are a fund manager or you are an investor. But if I listen to you, it seems like you are also quite very much active in the businesses you're investing in. Is that correct?
For sure. So we know that at the stage that we invest in, our companies are probably very product specific, but they need assistance or advisory in order to get them market specific. And how do you build a commercially sustainable business in future? Education is a fundamental part of what we do post-investment. So if you ask us, how do we do this at scale, is we obviously invest capital, but most of our value comes from investing after our investment process, which is talent. We help our companies find the best talent for their businesses. Post-investment, we open networks. A lot of Africans are not born into specific networks. So we build networks of capital providers for them, but also industry knowledge specialists, so advisors for them. We do a lot in terms of education, but our strongest moat around Launch Africa is peer-to-peer learning. Launch Africa has the largest community of entrepreneurs helping themselves as a community of peers. We've got over 350 entrepreneurs on our platform. And instead of us paying attention to each one individually, often a lot of the challenges can be by just asking within the platform. And we know the best learning in life happens between you and your peers. So that is our strongest competitive advantage.
Janade, now I understand what architecting rather than accumulating means, what Zach is often saying. So thanks for explaining that. And maybe just in one line, Zach, how do you then describe what makes Launch Africa unlike any other VC firm on our planet?
I mean, I could speak for hours about this, but if I had to put it in
one line, that's
I'd say Launch Africa is the bridge between brilliant African founders and the capital that they need to scale. Think of us as an innovation tracker fund. We spot trends very early, we back the best founders at the seed stage, and we give them the credibility to raise their next round at a fair valuation, and that closes the gap, and we become a barometer for the entire African tech ecosystem.
Perfect. We stop here. Next question.
So you speak always about the 5 highs framework. It's because in impact investment, there's problem always with return and impact, and you are saying higher returns and higher impact. So how do you go beyond this spreadsheet, measuring impacts, and really truly change lives?
Yeah, that's a very good question. So for us, we commercial first. We're very responsible about our investors' capital and returning capital. But the same fact, for the mere fact that we operate in Africa, impact always have to be a priority too. And we have grouped our impact around 5 major pillars for us, which is more capital, more talent, which means job creation, more education, because we want to create a generation of sustainable businesses run by great leaders, more innovation. Africa is the fountain of youth on the world, and we need to drive innovation through that young population. More diversity. In Africa, there are more female entrepreneurs than male entrepreneurs, which is a standard nowhere else in the world. And if you bring those 5 factors together, it means more impact for us. So although impact is our capital is directly linked to our impact. And if you look at real results that we've achieved in 4 years, is our capital has unlocked 60,000 jobs in 4 years. If you extrapolate that number to the number of jobs that many African countries have promised, we have over-delivered, given our little capital, than most African countries. 13,000 of those jobs are first world digital forward jobs that can be relevant anywhere in the world. And we have 20% of our capitals directed to female founders, which is 10 times the global average. Funding a woman is not only funding a business, but is funding the entire society. And that is a core principle of our investment process.
Okay, I'm convinced.
Okay, right now, Africa's tech scene is on fire. What trends make you sit up and say, this is the moment we've been waiting for?
I mean, so obviously, fintech has been a core barometer of measuring the success of African tech companies. The reason why fintech is so important is because if you look at 54 countries across Africa, we have different ways of getting paid from file transfers to mobile money to debit to credit to remittances. It's a very complicated system, and you can't just have a one size fits all model. So if you can solve for fintech, which includes asset management, savings, investments, credit, peer to peer, invoice discounting, factoring, and work with the large banks, telcos, and insurance companies, that has, for the last 10 years, been by far the most innovation, the sector with the most room for innovation. Number two is most likely logistics, mobility, last mile delivery, and supply chain. There's a huge opportunity to optimize supply chains across Africa, not just in agri, which is the obvious entry point, but in retail. And then, as Janade mentioned earlier, healthcare, education, using technology as a means to solve real world problems, but going through large distribution channels, which is banks, telcos, and insurers, is a sure path to reducing your customer acquisition costs. And that is often the biggest challenge when it comes to scaling a startup or an SME to becoming a globally relevant company. And that's one of our biggest focuses as a fund.
Emerging markets, because we have been in the sector of impact investment since decades, comes also with storms, politics, regulations, uncertainty. Yet you seem to be thriving in there. So what is your secret to turning these kind of volatility into a victory?
That's such an interesting question because we can only control what we control, right? And so one of the things that we can't control dynamic markets, so we can't control currency fluctuations. We can't control political instability, but in this world today, who can, right? The things in our control is investor protection and the rule of law. So our fund is in Mauritius. Mauritius has got the most open, transparent financial services sector in Africa. It also got the most favorable tax treaties for us as a fund, but also for our investors. Then secondly, all of our companies are incorporated in economies where the rule of law is very strict and where the investor protections are strong. So the US, the UK, Switzerland, Germany, Singapore. It's really part of our investment process that we protect our investors' capital as much as we can. It also allows us for easier exits that we have once we are able to liquidate those companies. Then I would say that we're on the ground and we've become the African specialist in country. So we are not a fund that sits in one central location. We are operating through 9 offices across the African continent, which is Cape Town and Johannesburg, where Zach and I operate from. We are offices in Accra, Abidjan, Mauritius, Cairo, Nairobi, and we've got some team members in London because there's a lot of capital targeted towards Africa operating out of London. So we are very close to local regulators, local corporate enterprise customers and policymakers, and we are driving the ecosystem in locally where we are and protecting our investors' capital through having the companies incorporated elsewhere.
All right, let's go a little bit into details of the funds. So you set up 2 funds, and can you maybe give us key numbers of both of the funds, and how are they different, and what were the main achievements of those?
Maybe I'll talk a little bit about Fund 1 and Janade can chime in about Fund 2. Yeah, so Fund 1 was launched about 5 years ago in the summer of 2020. We raised $36.2 million from more than 230 investors across 45 different countries. It was a good mix of individuals, family offices, angel syndicates, corporates, and large institutions. And it was one of the very first funds in Africa to be truly democratizing access to VC. So anyone could get access to an asset class that until then was pretty much privy to a wealthy or the very the creme de la creme of institutions. So we became the very first fund in Africa to democratize access to VC.
May I
Secondly,
interrupt you? How big was the investment size, so the minimum investment that you have accepted in the first fund?
In Fund 1, we would take investments as low as $50,000,
Okay.
which is when we had more than 200 plus investors. But the average investment across the investors was around the $250,000 mark. The average check we would write into a portfolio company was between $100 up to $300,000. We looked at almost 5,000 companies over our 2.5-year investment period, and we ended up investing in 133. So that's about, a 0.5% sort of acceptance rate. So very, very thin funnel. We ended up investing in 22 different African countries. So even to this day, 5 years later, we are by far the most diverse African fund from a geographical distribution perspective. We've deployed $31 million into these companies over a period of 2.5 years. But probably most interesting to our LPs is we're one of the only funds that allows our LPs to co-invest with us without charging any fees or carry. So we do all the diligence, technical, financial, legal, operational, and most important, human diligence. And then our LPs can share all these materials amongst themselves and choose to invest in these companies directly. So most of our investors have the opportunity to so-called double dip and learn about the African ecosystem without having to physically be on the ground like us. That's our job. We're now at the middle of year 5, so we still have a long way to go from a fund life perspective. You'd be very pleased to know that we're currently sitting at a 22% IRR, which is growing.
Nice. Bravo. Well done.
Thank you. And we've had 13 exits already in year 5. I mean, it's quite rare for even funds in Europe and North America to have these numbers. We've had 5 cash exits. We have another 4 to 5 cash exits planned for this quarter. And by the end of this year, we plan to do our first distributions back to our LPs for up to 10% of their capital. So we've done quite well in Fund 1 and are super excited about Fund 2, which Janade can have a big talk about, a quick talk about.
So what's the main difference, 1 and 2?
Fund 1, like Zach said, was really setting us up as the tracker for innovation in Africa. Fund 2, we've got more data now. On a monthly basis, we manage 100,000 data points in order for us to make more better informed decisions. So Fund 2, we continue investing around the same hypothesis or investment thesis. Fund 2, we are just investing more. So in Fund 1, our maximum investment was $300,000 into companies. We are now investing up to $1 million into companies. That does 2 things for us. One is we do want to hold higher equity participation into these companies so that we can have a more meaningful influence into how these companies grow. And secondly is in the high-performing companies, we want to double down and follow on investments because ultimately it will give higher returns. So we have better deal flow because now most of our deal flow comes from our community of founders. We've got 350 founders on our platform. They know who's building what in country, and they become our first level due diligence before they even pass a deal to us. Our investors are also very active in finding great companies for us. So we have better deal inflow, we have better data to make informed investment decisions, and we are now investing more so that we can have better returns in future. We started this journey, Fund 2 journey, about 20 months ago. We have raised 13 million, and our target is to raise 50 million with a hard cap at 75 million. So we still have a way to go, but excitingly, we've already invested into 31 companies throughout the continent. 2 star portfolio companies in our portfolio is Credete in Nigeria, who their innovation is to use remittance data in order to create a credit profile for customers. One of the first in the world. And since investing just about 18 months in them, we sit on 12x on our return on our capital on a book value basis. And then we also have Octavia, which is a carbon sequestration technology startup in Kenya, funded mainly by Swiss investors. And that innovation in climate change will definitely be able to attract more investments into the company, but also Africa, and drive Africa's climate agenda, which is a very important aspect of the impact that we want to have in Fund 2.
Now that you started sharing some names of the founders and companies, so can you share a story of one of the founders whom you helped with your fund, whose story still gives you goosebumps when you tell it? So who was the most impactful for you?
I mean, Janade mentioned Credete earlier on. I can maybe just share that story personally. It's by far our top performing company in Fund 2, but I think the story behind it is quite significant. So Adeola Adedewe, the founder, is like you mentioned, building a digital lending marketplace in Nigeria. But the emotional core of Credete is more than just a business idea. It's a very personal story. So imagine you move to a country with dreams and you have a very strong work ethic, but you're told to everyone that you're financially invisible, right? That's what happened to Adeola. So he had the means and the responsibility to send money home to his family, right? Because he's an immigrant. But when he tried to do so, something as simple as getting a car loan or an apartment, he was rejected, right? All because his financial history did not fit into the traditional box of credit scoring, Experian, TransUnion, etc. So for millions of African immigrants, this is the feeling of being unrecognized. They're the backbone of their families, supporting their family with remittances regularly, but this loyalty of financial discipline is completely ignored by the banks. So what Credete did is they take this consistent act of sending money home and they transform it into a financial tool. It provides a path towards financial freedom where people who are supporting their loved ones can be seen and then eventually scored. Now that barometer is now creating an alternative credit score for African diaspora, which traditionally has been completely ignored. And then the results speak for themselves. This data is now used by banks, insurance companies, telcos, big retailers all over the world to provide better terms to African diaspora sending money home. When we invested in Credete, their valuation was around $8 million. This is just 18 months ago. And they were doing about $50,000 in monthly revenue. Today, just 18 months later, they're doing $1.6 million in monthly revenue. And they just officially announced a Series A round backed by 2 of the largest VC funds in Africa, late stage funds at $100 million valuation. So it's not just a powerful story, but it has a very strong commercial benefit as well.
But I think it's all starts, with the heart, when there's really some unjust thing there and somebody is addressing it, then it's really the justice comes back, and then that you see the thriving of those people, who deserve it. And that's what I really love to hear, this kind of stories. Thank you for sharing.
Sure.
But I read also that you made some secondary investments in unicorns like Flutter, Wave, and Move. So how does that supercharge your early stage mission?
Yeah, Ben, it is a bit of a balancing act. I mean, early stage is very exciting. That's the heart of what we do. But every now and again, because we are Africa's leading early stage venture fund, there are a few later stage companies currently at Series B and Series C, a few of them prepping for IPOs, that want to have iconic African venture funds on their cap table. So companies like Flutterwave and Move that are Series B plus, They want to have funds like us to add significant strategic value to them as they prepare for market expansion, product expansion, regulatory compliance, and legal challenges as they move towards an IPO. So every now and again, we get asked inbound by these later stage founders to please join the cap table and take the place of early angels who have provided capital 5, 6 years ago, but don't add a lot of value today. So we get the opportunity to buy in at really deep discounts. We can't disclose exact numbers, but often we get discounts of more than 50%. So we're able to make an immediate return on our capital getting into these transactions. So this isn't our bread and butter, but for a small percentage of our portfolio on a case-by-case basis, we can get into deals that often are impossible to get into because of our reputation as one of the top value-adding funds in Africa.
I was just thinking, you keep a very big piece of your capital, nearly 40% of it, for follow-ons. So how does that bridge this infamous growth gap that kills so many young startups?
Yeah, I mean, we have quite a bit of our capital for follow-ons, and the reason for that is there is a shortage of capital at the early stage, which we pioneered 5 years ago through Fund One, and because our LPs co-invest with us, there is a certain degree of value add from an advice, mentorship perspective, product expertise perspective that our LPs can bring when they co-invest with us. But the reality is, we typically have pro rata rights, preemption rights, whatever you want to call them, into these companies post our initial investment. And in Fund One, we had to waive all these pro rata rights because we just didn't have the capital to do so. What we can do now is we're able to invest into Series A and Series B rounds of companies that we backed at the seed stage, but still have the benefit of much better terms because we were lead investors in their early stage rounds. So strategically backing your best companies when you've already seen their growth for 4 to 5 years gives you a much better edge from a commercial perspective. And it would be a waste of capital to not set aside money to back your winners. And that's part of our core strategy in Fund Two.
And this also kind of sort of balances or de-risks the fund. Like Janade mentioned earlier, that your first priority is to protect the investor's money. And this is sort of kind of reducing the risk.
Correct. And maybe I'll just add that if you look at our size, typically in Fund One, Launch Africa was 5, even 6 times the size of investing that typical funds would, which have 15 to 20 companies in our portfolio. In Fund Two, we would probably be 4 times the size of an ordinary venture capital fund. So we maintain the pace of our impact, but we are now also doubling down on making sure that we've got the most returns out of our star portfolio companies. And that's why we're doing both real high impact through our size, but also very deep returns by our portfolio performing companies.
Our follow-on funding is milestone based. So we would typically write a check of $250,000 to $300,000 into a company. And then within 6 months, if they hit certain KPIs of revenue, transaction volume, customers, you name it, then we would lock in additional capital. But often we as a fund have the flexibility to fix the valuation caps over a 6-month period. So our weighted average cost of entry is still quite low. The average entry valuation that we're coming in as a seed and Series A fund is still around the $4 to $6 to $7 million pre-money. And these are companies doing $50,000 to $100,000 in monthly recurring revenue. So I'd challenge you to get those sorts of deals anywhere in Asia, Europe, or North America. There's a big arbitrage that we can work on in Africa.
It seems you hit really the sweet spot.
We're trying our best.
Now, gentlemen, if we look at the future, so if you imagine yourself in 5 years, looking back, what will make you say, yes, Fund Two changed the game? So what is this impact that you are aiming for?
for me personally is the ability for us to continue the story that we've built and to prove, one, that we can attract more capital into Africa. Secondly, that we can grow these sustainable businesses. And thirdly, that we can prove that liquidity in Africa exists. If you look at our priorities in the organization at the moment, the number priorities, continue the work, the good work that you've done. And then second priority is make sure that investors' liquidity is returned to that. So we have an entire exits team, very active on growing an exits market, which in many ways is still very nascent on the African continent. So Launch, typically it's only done through corporate M&A, but Launch Africa is the first company to have done a secondary transaction. So much so that we have set the tone for new legal documents to be developed and legal ways to transact between funds, right? We are pioneers in the space. We are now looking at how do we securitize our assets by bundling certain assets together and then offload that into a new investor pool. So we are constantly innovating ourselves to create new market opportunities so that there are more exits and more capital coming into the continent, but also flowing back to investors.
Mm-hmm.
And what really gets my attention also is that you have backed over 20% women-led ventures. And that's really a big number. So what superpowers do these women founders have, which investors everywhere should pay attention to?
Yeah, so it's a very personal topic for me. My mother was an entrepreneur, not able to scale a business. And so I'm determined to, in my first fund 20 years ago, was a female gender lens fund before gender lens investing was a thing. So we know that that women don't only use a dollar for themselves, but 90% of that dollar goes into the broader society. When you invest in a woman, you invest in children, the elderly, and society. When you invest in a man, only 60% of that dollar goes to the intended capital and the benefits to the broader society. We also know that women outperform male counterparts by 30% IRR, but you need an equal playing field, and the playing field is not equal for women. So we work with our female founders on how to optimize their business and how to optimize their sales processes when they're dealing with predominantly all male found clients. Honestly, we fundamentally believe in diversity provides the best solutions always. So if you look at the Launch Africa team, ourselves, we've got strong female representation, but we've got people from, I believe, 9 different countries, all adding their perspective within the African context. So when we are building for the continent, women in Africa dominate the entrepreneurship ecosystem. So we should be investing in more women in Africa because they are the largest entrepreneurial representative body that we have in Africa.
Not only in Africa, the people should invest in women, all around the planet. Europe is catching up slowly, you know.
I remember because when we started with microfunding, microlending nearly 30 years back, the target was mainly women because they really do amazing job. But Zach, you mentioned that you are working with LPs all around the world. How do you keep them emotionally connected, not just financially, but emotionally to the lives being changed on the ground?
Yeah, I mean, so we share lots of. We're extremely transparent as a fund. We share details about our portfolio investments with all our LPs. Every deal we've done, we introduce them to the founders personally. We share all our DD, our financial, legal, technical, operational DD with our LPs. We actively and proactively introduce our LPs to our founders that want to benefit from co-investing in these companies. But remember, a lot of our LPs are ex-founders. Some of them are founders of billion-dollar companies, unicorns. Some of them are C-suite executives at big banks, insurance companies all over the world. And later in their lives, they want to sit on the advisory boards or mentor the top founders in Africa. So without getting too into specific names, some of our LPs, for example, lead big banks in the US, and they want to join the advisory boards of leading fintechs in Africa to help them grow and scale and bring not just their capital, but their mind, their networks, and their resources into these founders. LPs rarely, I mean, most fund managers create Chinese walls between LPs and founders.
Yeah.
What we've said is we are making it completely open source and transparent. LPs can interact directly with founders from a co-investment perspective, from a mentorship, advice, growth perspective. And then ultimately it creates a platform of trust. Ultimately, founders can trust LPs, LPs can trust founders with their capital. And then ultimately the beneficiaries are the entire ecosystem. And if we as a fund can provide that tool for it, I mean, then what more can you ask for? This creates a culture of creating significance, not just success. And that is very important for us as a fund.
Nice. Now, we are running out of time slowly, but I still have a few interesting questions which I want to ask. One of them is, so there are so many misconceptions about African venture capital. What myth do you most love breaking, actually?
So for me, I'm very passionate about governance. I think that the myths of all Africans are corrupt or misuse capital, I think that is a perception myth and not a real myth. And in our sphere of influence, we are able to use our platform and our strong brand in order to drive better governance at the early stage, so that we create a generation of strongly governed, sustainable businesses. So Launch Africa is developing what we call the GEAR framework, which is governance, ethics, accounting, and risk management standards for all African entrepreneurs. And we're starting with our own entrepreneurs, which is a large body of entrepreneurs. And we believe that through the GEAR framework, if we can engage early enough by putting the right behaviors and practices into entrepreneurs, then that will grow sustainable, strong African businesses in future. So that's what is a strong myth that I want to dispel in Africa.
Yeah, another misconception that people have about Africa is just about copy pasting models from Silicon Valley or Europe. That's such an outdated concept. African founders are innovating at the frontier. They're building solutions that the world will copy in 10 years. I mean, take the example of M-Pesa and mobile money, right?
Mm-hmm.
Mobile money was a concept built almost 20
I know
years.
those companies. Yeah. Mm-hmm.
And now you have companies in the US saying, how can we integrate financial services into telcos? Africa was a pioneer in the insurance industry, right? We completely skipped landlines and evolved into the mobile age. I mean, the example we give of Credete of remittances being used as a barometer for lending. If you think Africa is just a consumer market, you're missing an important fact that Africa is becoming a producer of innovation. That's a big story. That's another big myth that people have.
And finally, for every LP and for every young African dreaming of building something that matters, what is your one
or
message
not
to
even
them?
African, any young dreaming entrepreneur dreaming to build something? Can you say a key message to them?
Yeah, I would say just remember that don't chase becoming a unicorn or getting $1 billion valuation and doing what people tell you to do. It's really important to chase a vision, solve a real problem, right? The big valuations will follow. Be obsessed with your customers. Don't be obsessed with your investors, right? And be resilient. Building in Africa is hard. You're going to face things like currency swings, regulatory roadblocks, all of that. But don't be afraid to start small, right? You have to have purpose. You have to have a vision. And remember, Africa is 1.5 billion people. The consumer purchasing power in Africa has grown exponentially because of mobile phone penetration, the lower cost of data, and our ever-growing population. So Africa is now moving away from becoming just the world's breadbasket into a consumer-driven economy. So just think about the legacy and the impact of the work you're doing, and not just financial and numbers.
Amazing. I love that, Zach. And Janat, what would
Yeah,
you say?
I would. Zach is absolutely right, and I would just say is that in many ways, Zach and I are entrepreneurs ourselves, and Launch Africa is our entrepreneurial venture, and we've done a significant amount of work in 5 years. You have to work hard. You have to keep it simple. You have to know your customers. In Africa, you have to have a distribution. Make sure that you've got distribution for your product or service. And you chip away every single day at your big dream. Make sure that you've got a higher purpose, because Zach and I wake up every day to transform this continent. Make sure that your dream is aligned to your higher purpose. And then lastly, build a very strong team around you. Launch Africa is not a story about Zach and Janade, but there are 16 people that hold us up every day. And that is what the magic is of Launch Africa. It's our team that supports us. So surround yourself with the best people that you can find.
Wow, that's
Wow.
amazing. So it's
I think
basically
I'm going to join them.
okay. So thank you so much for reminding us about service, humility, dreaming big, and also, of course, the courage to do that. Thank you so much, guys, for joining us today. See you in Africa, I guess, or in Switzerland.
Thank you both.
Thank you.
So with this, we're going to end this amazing show. The time went so fast, and
Amazing story, and it's really that made it clear that Africa is not only about aid, but it's about innovation, it's investment. It's amazing.
Yes, so to our viewers, transformation often begins where others see risk. So it is in spite of whatever happens in our world, see the opportunities and invest fully with your resources and with your heart. Bye for today. Bye-bye. What an inspiring conversation. Impact investing is more than just finance. It's about shaping the world we want to live in.
If this episode sparked new ideas or possibilities for you, don't keep it to yourself. Get involved.
Subscribe for more powerful insights. Follow us on social media and be part of this movement.
Are you an investor making a difference? We'd love to feature your story in our next episode. Reach out and join us.
Let's build a better, more sustainable world, isn't it? Together. See you in the next episode.